All right. So we just finished off talking about how to tap into the pension funds, how to basically extract money from IRAs into self-directed IRAs, where you're creating that level of trust. You're creating that relationship with an individual to have them really seriously consider what it is that you're offering when compared to all the different things out there in the marketplace. So that was the tactic. That was the methodology I've spoken. I haven't really spoken to you about the sales pitch itself in regards to how you structure that pitch. This isn't intended to be like a sales training course. This is really me giving you tactics and methods, which you can deploy and execute against. And I think there are plenty of other sales trainers out there. If I ever do sales training in the rest of my course, the rest of my modules, it won't be sales training in its in the generic sense. It will be more how to sell against one thing in particular. I'll talk about features, benefits, how you can manipulate a phone call or some kind of an interaction into sort of having someone buy into an idea of yours. But what I'm about to talk to you about right now is the evolution of that. And that's the less hands-on approach, because that was very hands-on. That's quite intensive in that either you're doing it yourself or you build a sales team around it. Like I had 16 people on the phones doing this. This is now the hands-off approach. It's a bit complicated to set up, but it is a tactic and it's the future and it's something that you can actually do. And a little bit of Googling out there will show you the kind of companies that you can work with in creating this and setting up. I won't go into them in too much detail right now, but I'm just going to give you, like I said, the tactic, the methodology. So remember we spoke about, you shouldn't have forgot this, the structure. This is you being compliant with the SEC, the Securities and Exchange Commission. Means you can now legally go out with a tin cup and say, hey, I want to put money in this pot. Okay. That's what you're legally able to do. If you didn't have this structure in play and you went out with a tin cup and you say, hey, I want to raise money for this investment, you get shut down, you get fined. If you stole money, you get arrested. So this is going to be working along that strategy, but working with another entity. And this is the blockchain. This is the crypto. This is that scary place that everyone's worried about, right? And listen, I was watching crypto's currencies skyrocket in value. I was watching Bitcoin go from a couple of $100 to 600 to 6,000 and 18,000. Like an idiot, I bought at 16,000 thinking that it was on the rise to 100 grand and it just tanked after 18. And that created a lot of volatility, right? But it didn't take people out of the cryptocurrency market. You had people buying into the whole plethora of other cryptocurrencies available. They were buying, what were the ones? Ripple. They were buying Bitcoin Cash. They were buying, what else was there? Ethereum. And I'm not an expert on the different currencies, but I'm still not an expert on blockchain either. I just know how to execute. You know, I'm like a sharpshooter. You show me where to shoot. I'll figure out how to do it and bang, I've got it. So this is my little sharpshooting exercise for you. It's worked very well for me on about 3 deals so far. Each deal was the first one was 6 million. Second one was 8. And I'm trying to work up on a $100 million deal right now. So this is the blockchain. So let's look at this. Remember I talked to you about this bucket? That bucket right there? Let's draw this bucket here. Let's say this is going to be a $10 million deal. You've seen a multifamily for 10 million. All right. Maybe you've sent them a letter of intent. Okay. You've sent them a goodwill statement saying, hey, maybe you have a relationship with the owner. This is your first deal and they're willing to sell it for you for 10 million. And they've given you a time frame for which if you can come up with the money, they'll let you have it. This is what happens if you're actively pursuing this market, which I hope you are. It's the reason why you're on this course, because I did market this to people who were looking to raise money for real estate. So I'm hoping that you've got some idea of what you want to do. Let's say you've got this for 10 million, or you've got an opportunity to buy this for 10 million. It's a bucket. It's empty. You need the money to go in there, but you are compliant. It's a green line around it. You're good to go. It's ready. You can accept money and you can deploy money once you have it. So you're SEC compliant. Now we start talking about, because that's really important when it comes to blockchain. If you looked at any of the news articles out there, if you just type in ICOs or any kind of cryptocurrency in the news, what you'll see is loads of tragic stories of people trying to set something up and then have the SEC come down on them like a ton of bricks because they haven't ticked the right box or they didn't declare themselves correctly or all sorts of things. And equally, the people who just have money in crypto, when you pull that, let's say you put 10,000 and you made 50 grand in like whatever cryptocurrency, you want to put it back into fiat currency, which is like your traditional currency, like the dollar, for instance. And you don't want to do it, right? Because there's fees in doing that. And also, a lot of stuff happened at the time when I took interest in this. A lot of stuff happened at the time where people didn't know how to declare this on their taxes because it wasn't considered a currency as far as the government was concerned, or the IRS was concerned, at least in the US. They didn't know how to classify it. What kind of asset class was it, and how was it going to be taxed, and all this sort. So people kind of kept it in there and sort of chopped and changed between cryptocurrency. This kind of opened up a completely different market, and what that market was ways in which you could safeguard cryptocurrencies and tethering it to real estate, and that's of course what you're trying to build here, a real estate portfolio. So there's a couple of ways to do that. It's a security-backed token, and of course, what are you? You're a security. You're a compliant security. So what you can do, you work with an exchange. I mean, I worked with an exchange in Europe, and let's just do that here. Exchange. You work with an exchange and you say, hey, look, I've got this piece of real estate. I want to tokenize it. Or I have this piece of real estate we're going to buy. I want to raise the capital to purchase it. It's going to be worth 10 million. So I need to tokenize this $10 million opportunity. So here's what will happen. What this exchange will do, and this is what they do, is they essentially set up a fund. It's like another empty bucket, right? They set up a fund, this empty bucket, that is compliant with rules surrounding securities laws in the fact that they are buying into, or these are tokenizing a security that already exists. And it's to the exact, it's value for value. It's going to be a $10 million raise, and that's it. It's capped at 10 mil. So, and just like a fund, if people bought into this token or bought tokens in this tokenized asset, this tokenized security, which is locked and sealed, it won't convert to fiat or the dollar value that you want and need to buy the assets that you want until it's completed. So it's like a capital raise. It's a fund. So until it reaches the very top layer, it hits that 10 million mark, it won't convert through the exchange where they'll take their little percentage. That's what they do. That's the reason why they'll do it for you. And then they'll come in and you'll have the money that you want. And that's the plan. And the way you do this is once you work with these companies, you're basically entering into what the next section is going to be. And that's basically how you can utilize a distribution network. Because what is an exchange to your company? Well, they're effectively a distributor of your product. Your product is this property, right? So they're now taking your project, they've structured it in a certain way that's applicable to their market. So in their market, they're talking to anyone who has Bitcoin and Ethereum and Litecoin and the various others they don't want to deal with the volatility anymore. Like, oh, do you know what? I've got $1 million there. I want to move a portion of that out into something that's a little bit more stable. And of course, you're doing real estate, right? So real estate goes up in value, doesn't it? It goes up in value over time. Even if it takes a dip or it pauses, eventually real estate goes up in value. It's finite. And of course, if it's cash flowing, it's producing a return. And if you've got like a 70-30% split on the deal where anyone who enters in there earns 70% of the financial rights, even though they own the whole property. So you're taking 30% for managing the property. And then you can structure your deal, how you need to structure it to make it tasty and something that's attractive. We can go into that later as well. But for now, we're just talking about the reason or the rationale why someone on this side, the blockchain, the cryptocurrency side, would want to put money in here. Well, it's to safeguard their money too, just like those IRAs, right? They're dealing with all these. I mean, look at those. They're looking at like stocks. It's like the stock market. All these different cryptos are going crazy. They were like, okay, let me just portion off some of it, take some chips off the table, if you will, and move it into something that's at least tethered to a real asset. And that's why people would do it. And of course, these companies put together little white papers and they email them out there to their buyers or anyone in their forums or networks. And they're effectively promoting, they're the ambassadors to your product, promoting the fact that there is a safe, secure place to store your value. And it's going to be tethered to this. It's tokenized security that's been tokenized. And this is what it is. We've got the valuation report. Because of course, you've got to go for a whole loads of things. So you've got to get the value reports here. You've got to go for everything. There's a whole slew of information they're going to need from you to have this happen. But it is a solution, and I go into this later in my training course in terms of the actual specifics. I actually do the play-by-play in terms of what company I used, how you can contact them, how this is structured. Very, very, very interesting stuff. And it is the future. I mean, eventually this kind of method will it'll take all these kind of things out of play. Everything's going to be digitized and everything's going to kind of work, I believe, at least on this kind of a blockchain environment. So this is you taking that little baby step in that direction. And of course it's been very lucrative because money just flies in. And the beautiful, beautiful thing is for anyone to have currencies on this exchange, if you've signed up to any exchange, Coinbase or anything else, they do checks on you. So we don't have to worry about who is accredited or who is compliant or sophisticated as an investor. We know and have all the KYC information, the know your client information that is super, super, super important as far as being compliant with your security. Now, I haven't spoken about the KYC requirements. I've spoken simply about accredited investors, but there's a lot that goes with the paperwork that you need to have in play to make sure that you are operating in a compliant manner, and doing the know your client, having the know your client details under check is super important, including knowing whether or not if they're saying that they're accredited, they have to prove that they are accredited. And of course, if they've signed up to an exchange, they've given their equivalent of their social security to the exchange. They've showed their banks, there's a certain level of KYC that they've had to go through to even be able to be on the exchange, to see your option on the menu, to be able to buy the token. So you've got a very, 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 I guess, self-regulating entity here that can help you raise capital very quickly. So look, I'm going to move on to the next section, which is really going to cover, how to do all of this very quickly. That's what you want. You've got the exchange here in regards to how we can tap into the crypto markets. We've got utilizing you or your sales staff or people that you work with, your partners, I've given you a route to execute against dragging in money. Now I'm going to talk to you about how to do that very, very quickly. And we're going to talk about utilizing other people to make that happen. It's basically taking a leaf out of this book here, which is using another exchange. And we're going to lean into that and see what we can achieve, because for the last 10 years, that's the real secret, the secret of basically being able to work with relevant partners. So I'll see you in the next section.